Biden urgently returned to the United States in order to save negotiations regarding the national debt issue. Is a US default a thing to be afraid of? What will happen to Bitcoin in this case? A number of important data for the crypto market and the state economy have been released. Therefore, Fed officials are once again talking about raising rates. And is it all that bad? Meanwhile, Bitcoin shows hidden growth potential. Hopefully they haven't managed to shake you out of the rocket which you're just preparing to take off. In this video, I am going to tell you about what's going on and what to expect from the crypto market in the coming days. Let's get into it. Last week, Jerome Powell tried to reassure investors, and at some point he actually succeeded. At the meeting scheduled on June 14th, the probability of another Fed rate hike fell to around 15%. Still, over the past few days, it has skyrocketed above 60%, and it seems like the rate will be raised again at the next meeting. A number of important data and statements that came out between May 24th and 26th are to blame. Starting off with the published minutes of the US Federal Reserve meeting, which took place back on May 3rd. Here, you need to realize that Jerome Powell is only the chairman of the Fed, but not the mastermind behind the printing press. This body makes decisions on the basis of voting. At each Fed meeting, its members bring various proposals to the table and vote for them. On Wednesday, May 24th, we were finally able to see the minutes of the latest meeting scheduled on May 3rd. Now we can roughly build expectations from the upcoming Fed meeting on June 14th. The most important fact to read between the minutes lines is that the future policy of the Fed may become less aggressive. In other words, the rhetoric of the Fed members is becoming less strict, giving hope for a pause in the rate hike at the next meeting. However, we have no reason to dream of any rate cut in 2023. All we can hope for is a pause in the advance. Whether it will be taken in June or not depends on several inflation data that also were leaked lately. Firstly, we gotta see the data on GDP and the US labor market, which turned out to be positive. US GDP for the first quarter of 2023 was 1.3% against the predicted 1.1%. Not to mention the past performance of 2.6%. Luckily, the figure got better than expected. Secondly, the number of initial claims for unemployment insurance in the US amounted to 229,000 against the predicted 250,000. One more case of figures being better than expected. The mentioned data provide investors with hope that everything will be handled with the very soft landing announced by the Fed. A totally positive thing for the crypto market. Things were going well enough, but then we had the data on the US personal consumption expenditure price index being released on Friday, making the matter worse with 4.4 against the predicted 3.9%. This is bad for crypto and other risky assets. Right after that, bearish headlines began to appear in the media. Inflation is rising again. Since the latest report, the probability of the rate hike stoppage in June fell below 40%. Now it seems like we're going to see at least one more rate hike move in June. You may ask, why did all this news not lead to some noticeable Bitcoin-related actions? The answer is quite simple. Everyone's attention is riveted on battles over the US national debt limit. More on this later. In the White House, both houses of Congress appear to be edging closer to an agreement on a debt ceiling and a 2-year federal spending cap. The parties haven't yet found common ground on all details, but in recent days, they were able to make significant progress in talks. Everything is expected to be decided by Tuesday, May 30th. An interesting fact, the US national debt has exceeded $31.4 trillion. Imagine this amount as stacks, each worth 10 grand. Then lay these stacks one after another in line. They would wrap the earth over 100,000 times.
Wow!
And although every effort is being made to prevent default, the restless Robert Kiyosaki continues to wait for the collapse of the state economy. The author of the Rich Daddy, Poor Daddy bestseller noted that the German economy is facing recession. In his opinion, this marks a very negative sign, while the US can expect the same result. What if I told you that a US default wouldn't affect Bitcoin in the way everyone expects? Sure, a US default will do damage to the crypto in a moment, though it would be positive for the cryptocurrency market in the long run. This sort of opinion was expressed by blockchain.com CEO Peter Smith. Because, as a Bloomberg poll recently showed, in case of a default, investors would buy the dollar only as a fourth priority. In third place we have Bitcoin, behind only US treasuries and gold. To sum up, everyone understands perfectly well that the process of delaying the solution of the national debt cap issue is just a mere political game orchestrated between Democrats and Republicans. Therefore, no default will be allowed. Do you actually believe a US default could happen this year? Write in the comments below. However, before the story gets officially brought to an end, the markets may undergo some nightmarish periods to shake out the weak-handed investors. So you better buckle up. Let's move on from the dirty political games. Give this video a like and see what's going on right in the Bitcoin blockchain itself and in our good old crypto market. According to Glassnode, the influx of major assets to crypto exchanges is at its lowest level since the start of the 2021 bull run. The blog analysts confirm the matter, stating that liquidity and trading volumes on crypto exchanges are at their lowest level since 2020. Scared? You better not be, as things may not be what they seem. Let me remind you that the less liquidity, the higher the probability of asset price manipulation. The percentage of bitcoins held for at least a year has reached a new record of 68% according to the same Glassnode. Moreover, 55% of these coins have been held for at least 2 years and 40% have been held for 3 years or more. The number of bitcoins held for more than 155 days has also reached an all-time high at 14.46 million coins. All that can potentially lead to a bull market, not only because investors believe in the asset, but also because the volume of asset supply on the market is decreasing. Sentiment analysts note 2 important points in a crypto market's current mood. Firstly, right now people are in no mood to buy back Bitcoin's fall. Secondly, players began to actively sell altcoins at a loss. On the other hand, the MVRV model reveals that the vast majority of altcoins that flash under bought signals. Historically, such indicators are more often prerequisites for a market reversal than an ongoing fall. CC data analysts also mention a decline in market capitalization and stablecoin trading volumes. One would think these are solely bearish signals. But crypto assets often begin to show big green candlesticks exactly at such moments of market interest getting faded away. The well-known crypto analyst, trader and Bitcoin maximalist Plan B also hints at the imminent growth of Bitcoin. In his stock-to-flow model, the course of the world's first cryptocurrency has already turned turquoise. Looking at how things went back in the days, this means an optimistic sign for the bulls. Therefore, my expectations remain the same: a short-term continuation of the correction period amid uncertainty over the public debt and the Fed rate. And as for the medium term, I just keep waiting for an update of the local Bitcoin high to 31,000. Please give this video a like, subscribe to the channel if you enjoyed it, and check out our other videos. Well, now goodbyes for now, folks.